All right, moving on. The annual FinTech conference, Global Fintech Fest, organized by the Payments Council of India, NPCI, and FCC, kicked off today, bringing the biggest minds in the FinTech world under one roof. My colleague Ritu Singh is at the event and is standing by to take us to the mood at the event and what startups have to say. Ritu.
Well, thanks for that, Shruti. It's been a very buzzing first day of this 3-day-long Global Fintech Festival here in BKC in Mumbai. 800 speakers across these 3 days, by the way, across your top banks, top fintechs, policymakers and regulators. So, expect a lot of brainstorming to happen here. And we've been speaking to many of these founders on the sidelines of these events. For instance, first up, I caught up with Harshil Mathur, the founder of Razorpay. And, he told me that, profitability is something investors very much focused on, is not too far away for the company, but the IPO, that is at least a good 2 to 3 years away, and until they can break even on an overall level, not just their core payments business, they will probably not look at an IPO. He also spoke about the big opportunity that is coming out of the unified lending interface and many other things. Take a look at what he told us. How large a part of Razorpay's strategy is offline going to be? And if you could give us a sense of, how much incremental revenue you expect from these sort of launches that you're doing?
Yeah, so online, of course, our core and like the AI one is primarily targeted towards online, but you're right, like most of our launches right now are on the offline side because that's one area we are seeing a really good amount of traction. We acquired a company, the EasyTap, in about 2 years back, and
for POS,
and through that we are going, and through that we have completely rebranded it as Razorpay POS. And we're quite deep. We have a lot of large businesses going live with us, including the likes of Lenscard, Apple resellers, and so on. And we're seeing really good traction there. And I feel a lot of innovation that happened in the online world hasn't fully translated to the offline world yet, especially in the enterprise offline. The small retailers actually are using QR codes and doing UPI everywhere, but the large enterprises are still missing out on it. And we want to be driving that change where all large enterprises places as well, you go into a McDonald's, you can pay with a QR and so on. Sure. That's one thing that we really want to drive. So that's a big focus area. It's still I think from an overall business perspective, it's a smaller portion of our business. 75% of our business is still online payments, and just everything put together is 25%. Yeah. But we expect that to be like 40 or 50% in the next 2 years.
Well, December 2022 to December 2023, that was a tough period for you with the RBI embargo. Now being lifted, it's been a few months. Give us a sense of how many additional merchants that were in the pipeline that you were able to add. Last you told us was 50,000 were in wait.
Yeah. Actually, it turned out to be bigger than that. So 50,000 was already waiting for us, that they wanted us to start onboarding and they want to come back to us. So that went live. But overall, we in the 2 to 3 months post the embargo, we saw more than 100,000 merchants go live on our platform. And that was massive. That's almost more than the number of merchants that we typically do in a year, happening in a matter of 2 months.
75% of the business online payments is at break even. What about the remaining 25%?
Yeah, so the remaining 25% is things like POS, Razorpayexpects, and the international pieces that we are doing.
Yeah.
I think all of those pieces are scaling quite rapidly right now. So focus is growth on these spaces. I think at least for the next 1 to 2 years, we want to focus on growth. Maybe we'll take 2 to 3 years to get to profitability on some of these lines. Simply because these businesses are growing at 100% plus year over year. We don't want to slow down that growth through any means necessary.
So should we assume that you're not looking at an IPO for the next 2 to 3 years until you achieve profitability at the overall
Yeah, that is true. I think we want to go public as a fully profitable enterprise, and I think given the growth in some of these segments, we want to wait for 2 to 3 years before we go there.
But what about the domicile shift back to India, where we're increasingly seeing a number of fintech players undertake that and also spend a lot of money doing that? What are you doing on that front, and how much have you set aside to just flip your domicile?
Yeah, we have been public about it that, hey, we want to come back to India. We feel India is the home market for us. This is where everybody knows us, everybody uses us. So you want to be here for multiple reasons, but primarily we want to be in a market that we belong to. I think that's a work in progress. That's underway. Of course, there's a significant capital cost to it. I can't give the exact numbers, but there's a significant.
We heard it's $250 to $300 million.
Again, without commenting on that, it's a large number. Okay. But we've set aside money for that. We know the cost of doing it, but we feel that the value that it generates for us in long term is far more valuable than the cost in short term.
Just a final question then. What does the coming year hold for you in store in terms of how many additional merchants are you looking to add on the platform? To what extent are you looking to go the lending book? And of course, your plans on the offline front and how that business will grow.
Yeah, so multiple things. On overall basis, there are 4 or 5 big pillars for Razorpay right now. Online payments is, of course, scaling rapidly after the embargo being lifted.
Yeah.
We're seeing massive scale up on that. So that continues to be a driving seed. Then there's offline POS, where we are driving a lot of new business coming on our platform, and we are one of the pioneers in omni-channel commerce, which is online and offline coming together.
Yeah.
The third piece is Razorpayexpects, where we are helping businesses do dispersals. We are the fastest growing payroll solution, tax payment solution, vendor payment solution, and so on. And the lastly is the international piece, where we are helping businesses in not just in India but in international markets. We launched in Malaysia.
Yeah.
We're looking at a couple of more markets happening somewhere this year and this FY. So that's a big driver. And lastly is a lot of value-add services built on top of this entire stack. So we launched loyalty in our FTX event that happened some couple of months back, where we are helping businesses do marketing and leverage Razorpay brand to do loyalty for their customers. So those are some of the value-added services that we are building on top. So a lot of excitement in the fintech space, a lot of new things happening, and we continue to figure out what is the best way to help merchants doing that.
While remaining compliant, a lot of fintechs now talking about the regulatory overhang. I wonder if that's something that concerns you in terms of sort of risks to growth.
I wouldn't call it as risk. I think regulation is a part and parcel of building in the fintech space. You need a set of rules, you need a set of boundaries to operate in. And I think we are glad that there is a very proactive regulator that we have in India, who's also working with us. I mean, you see RBI presence in this event. We see them participating, we see working with us, we see an active dialogue in figuring out what is the next thing that we can do and getting their views as well. So I think it's a collaborative approach, and I find it quite necessary for a fast growing ecosystem like India.